So the GTA real estate market is setting new records, but I don't know if that's such a good thing, and I'll explain why in a minute. But first, welcome back to Live at Lunch. I'm your host, Lambros B, and thank you for being here. First time doing this in studio with a guest live, so this is going to be exciting. Welcome back, Tom Winski.
Thank you.
So Tom is a mortgage broker who has been in the business for over a decade, and he's worked with lenders. He's worked with Canada's premier default insurance company, Sagen, formerly known as Genworth. But the main thing is Tom has a passion for, like myself, helping the consumer, which is you, make the right decision, the informed decision when it comes to buying or selling real estate. So welcome again, Tom, to the show.
Thank you, Lambros. Thanks for
It's
having me.
always a pleasure chatting with you.
Absolutely.
Fantastic. Okay, so as I mentioned off the top, the GTA real estate market is setting new records, but they're not so great because we saw a couple of months there where we saw 30-year lows in sales volume, but now we're seeing record highs in active listings. So we've never been this high, and last month in June hit a peak of available inventory for sale. Why do you think that is, Tom?
Well, I think there's a few factors, and I guess it's the way you look at it, right? If you're a buyer, it's a fantastic time. House prices are being sold at a discount.
Right.
If you're a seller, not so much. But there's a few things. I mean, obviously, there's some economic factors that are playing into it. There's a little bit of psychology as well, market psychology in it. But also, I believe it has to do with the renewal wave. So a lot of individuals purchased back in 2020 when we had ultra low interest rates, reasonably priced homes.
Yep.
And obviously there was that fear of missing out.
Yes.
Right? So now things have kind of shifted where those buyers that purchased in 2020 are seeing their renewals and they're seeing interest rates potentially 2-3% higher
Right.
than back then. So it's causing a little bit of financial stress for them. So they're now looking to offload that property and then move into maybe a different suburban market that's more manageable in terms of home price. And the other side of that is the fear of overpaying, or FOOP, I call it, right? So the fear of overpaying, so buyers are not stepping out because they're worried about the competition out there. A lot of them got burnt and scathed, in a lack of better words, during the COVID years. Properties were going 200-300 over list, right? So I think it's a combination of those two things, and then as a result, we're seeing some peaks in inventory for sure.
Yeah, no, that's a great point actually, and this is something that actually has been talked about for the last few years because everybody was wondering, well, with all these people that bought in 2020 and 2021, and most of them, correct me if I'm wrong, take out 5-year terms, right?
Correct.
So we always had a mark on the calendar, 2025 and 2026, as a potential crash in the market where people would not be able to renew their mortgages, and because I'm not sure how many. Do you have an idea of how many mortgages are coming due this year and early next year?
It was pretty high. I mean, we're seeing a lot more renewals these days in our industry, and obviously banks are becoming more competitive as well. And to your point, a lot of properties that were gobbled up over the last decade are investor driven, right? They're rental properties, and now with rents adjusting, condos obviously have been hit about 40% in their prices. So now we're seeing investors offload properties as well.
That's right.
So it's a few combinations, but yes, the renewal wave is definitely a big part of it.
Yeah, absolutely. And speaking of investors, the condo market has been hit the hardest. So, and all these stats that we're talking about, the condo market right now has been hit the hardest, as I mentioned. It's tough to sell a condo these days. The prices have come down quite a bit. There's a ton of them sitting empty. And there's some great, but on the flip side of that, there's some great deals out there. I've seen condos sell in the 300s and decent sized condos in good buildings, something which I haven't seen in years, right? So,
absolutely.
Do you think a condo investment is a good opportunity for buyers right now?
I do. I believe it has to be a conversation of what your life goals are. If you're working with a mortgage professional, whether it's at your branch or elsewhere, if they're not asking you the question of what are your plans, what are your goals in the next 3, 5, 10 years?
Right.
So if, for example, you're a first-time home buyer, you're purchasing on your own, you may not have the help from the bank of mom and dad to come and help you. Absolutely, condo would be a great option. You want to look for something a little bit more manageable to live in, gain a little bit of net worth, hopefully when the market rebalances in the condo sector. I think it's a good opportunity, but even, some other first time buyers are looking outside condos as
Yeah,
well,
yeah.
at some reasonably priced homes. So I think it all depends.
Absolutely. And I think it's a great price point for first time home buyers, right? I mean, where else can you get into the real estate market in the mid 300s, up to $400,000 these
Yeah.
days, right?
And there's some
Decent.
beautiful condos out
Yeah.
there as well that have been just recently finished in terms of build.
Hmm. Hmm.
So essentially, a lot of people have purchased the home, and for example, when their mortgage actually comes ready
Yeah.
for the closing date, not the occupancy date,
Yeah.
they now want to offload that property at that time, right?
That's right.
So you're potentially seeing assignment sales or fire sales with those new build units at a pretty good fire sale price.
Yeah. Yeah. So speaking of new builds and speaking of first time home buyers, the federal government introduced a GST rebate, if I'm not mistaken.
Correct.
But I'm a little confused because I thought if you're buying something for residential purposes, that you would get that rebate back anyway. So can you dive into that a little bit more and
Sure.
tell us what it's all about?
So the previous GST rebate, which is still there,
Okay.
was not focused on first-time buyers. It was for anybody that was purchasing a new build property or
Okay.
a substantially renovated home,
Okay.
but it did have a cap in terms of value, and I believe that cap is around the 450 range.
Oh, is that right?
And you
Okay.
received a rebate cap of around $6,000.
Okay.
So the cap wasn't really all to brag about or
Okay.
really, go home feeling like your pockets were full.
Hmm.
This new adjustment, which came into play this past May, allows first-time homebuyers specifically buying new builds of up to 1.5 million to receive the full 100%
Wow.
GST rebate, whereas
Okay.
the previous was capped, I believe, at 36% of the
Amazing.
GST. So
Okay.
um, if that translates, it's about $50,000 as the cap range of the new policy versus
Okay.
6,000 of the
Wow.
previous. So
Big difference, right?
big difference.
Yeah.
It obviously does have a little bit of benefit to the first time home
Yeah.
buyers.
Yeah.
And of course, new builds, it gives them the opportunity to actually sell units because
Right.
new build properties do need to sell 70
Okay.
to 80% of all
Yeah.
units before they actually begin to build.
Right on. Right on. That's true as well. So with all this inventory out there, so many options for first-time home buyers, whether it's resale, whether it's new build, plus with incentives to buy new as well with GST rebates, et cetera, and prices coming down. This appears to be a great time for people to invest in the real estate market. Yet people are still hesitating to pull the trigger. Why is that? I mean, I'm sure you're getting a lot of applications coming across your desk. What are people saying?
I think it's a lot of interest rate sensitivity, and I think it's a lot of unfortunate misinformation that's out there, right?
Okay.
So I believe a lot of buyers out there are hyper focused on what the Bank of Canada is doing, right?
Mm.
Outside inflation, yes, that is a general concern for everyone, affordability, right?
Yeah.
But interest rates have been fairly low. They're actually a point and a half, so 1.5% lower than they were last year. Our
Mm-hmm.
Bank of Canada rate is significantly lower, seeing 7 consecutive reductions and
Right.
2 consecutive pauses.
That's right.
So the interest rate environment is actually much better.
Okay.
Historically, we're still at pretty good interest in low
Yeah.
4% range,
Okay.
right? So I actually had a first time buyer the other day tell me, we're interested in buying because interest rates are pretty good right now, but home prices are even better. So that
Right.
was a very, very welcomed comment from one of my
Absolutely.
buyers.
Absolutely. And that's something they need to understand, right? So maybe there's a lot of fear out there, what their, friends and family are telling them, what the media is saying, things like that. So they're still kind of hesitating to
Yeah.
pull the trigger.
And I believe that there's a little bit of that herd mentality, right? Like
Mm.
if all your friends are doing it, right? So now all of a sudden you want to do it as well. And, right now, my best advice to a first time home buyer is do the research on your own, right? Get in
Yeah.
touch with Lambros, get in touch with me if you need some financing assistance. Have that conversation. Unfortunately, what you read out there is not all the answers. So Lambros and I will get on that hunt for you and get you what you need to make a comfortable decision for your future.
Absolutely. No, that's a great point and leads really well into my next point is, so if somebody is ready to buy or they made that decision, they want to buy, how to best prepare for that? Because it's not just as easy as, okay, I want to buy a house, go out there, like buying some clothes or a car, even a car, right? So a little more complicated than that. There's a lot of preparation that needs to go into it. Tell us the few crucial steps that need to be made.
So, of course, you want to know your budget. So, pre approvals are generally a step. I believe every first-time homebuyer knows they need to get pre-approved at this
Right
point.
on.
But the first thing I want to kind of disassociate from just a pre-approval is actually knowing your budget.
Mm-hmm.
Just because you've been pre-approved for $500,000, let's say, doesn't mean you should go out and spend the full $500,000. So I like to prepare any buyer, whether you're first time or experienced, with a budget spreadsheet. So I'll actually prepare a range based on our conversations of what you've got for down payment, what you're looking to purchase, things like that. And I'll give you a range of, let's say, $500,000 purchase price to $700,000 purchase price.
Right.
And in that, it'll show you your full carrying cost of that property. So
Excellent.
does it make sense to rent for $2,500 a month
Mm-hmm.
when all in, it could cost you $2,300 to own it, or $27, right? So you can actually view that. So my advice is, number one, make sure you know your budget and have somebody working to show you your budget. The second thing is if you're capable, so if you're leaving with your parents, a family member, somewhere where you're not paying rent and you've obviously got a little bit more capacity to save, pretend as though you're making those mortgage payments. You can go online and quickly grab a mortgage calculator estimate and see what the payment could look like, or give me a call and I'll work with you on that. And let's say your payment is $2,000 a month. Open up a savings account and make deposits of $2,000 a month to prepare yourself for owning that home. And then the last step is, I would say, again, along the lines of saving for down payment, make contributions to your RRSP and First Home Savings Account, FHSA.
Okay.
You can do up to $60,000 in tax-free rebate from your RRSP. So if your employers are matching, change your policy to get the maximum contribution from your employer to match yours, as well as contribute to your FHSA so you can redeem that and see a good check come tax season next year.
Amazing. That's great. That's great. Actually, that's a great point. And I'd like to talk about the FHSA, but maybe not today, maybe on a different show, because we still have a whole bunch more to talk about. I haven't even touched the stats yet, right? So we'll get into that right now. But one more thing on first-time home buyers as well that they cannot forget is closing costs. Because there's a lot of cash expenses that they need to make. I mean, financing is one thing, but they do need to have a deposit, first of all, which is typically in the 5% range of the purchase price. So bear that in mind, and that's liquid. That's something that needs to be paid out within 24 hours of making an offer on a property, right? And then there's closing costs associated with the closing end of the deal. If your lender gives you the balance of the purchase price, but you still have to pay the lawyer out of pocket. You still have to pay the moving truck or whoever is helping you move out of pocket. And there's land transfer tax as well. And if you're within the GTA, it's a double land transfer tax because there's a provincial one and then the municipal one inside of Toronto itself. If you're in Mississauga, then you only pay the provincial one, right? So anything else to add to closing costs?
Closing costs, I mean, there could be things like an appraisal. So generally
Absolutely.
between $300 to $500 in that range. Potentially an inspection. You might want to get an inspection if you're very serious about a property. I highly recommend getting an inspection report just to make sure you know what you're working with, right? First-time home buyers especially, this might be your first property, so you don't know what potentially aluminum wiring means, or copper, or when your roof was last done. Things like that would be very important and very costly if you need to replace.
Absolutely. I don't mean to interrupt you, but inspections sometimes are required by the insurance companies. So that's another closing cost as well. You're going to have to get home insurance on whatever property you make. And sometimes the insurance company may ask for different things like, was there inspection done, et cetera? What kind of wiring is there? Do lenders typically ask for an inspection report?
Generally, no, unless it's a property that is well outside a conforming property. So think about your regular everyday home. They may ask for an inspection report on a home that needs a little bit more TLC, more investor driven, or potentially a property that is 3-season or water access only might require an inspection to be viewed by the lender. But in most cases, they're happy with the appraisal.
Awesome. Okay, that's great. Okay. So without further ado, I want to jump into the TREB stats that came out real quick. And year over year, we saw prices come down about 5.4%. Thereabouts. Sales have come down about 2.5%, pretty much. Days of market, so the amount of time that a property takes to sell. We were used to the quick days of of COVID, where things sold in hours, never mind days. But that's gone up about 30 to 40% year over year. And we also saw active listings come up about 31%. So it's pretty crazy what's going on out there. But that's generally speaking, that's all across the GTA. I like to focus more on specific areas that I trade in, Mississauga, Oakville, Brampton, and Toronto proper. So Tom, I'm just going to read you some quick stats here, and you can share your thoughts as well. So, I mean, first of all, we've been talking about active listings going up. In Toronto, they seem pretty flat month over month. So the initial stats I just gave were year over year. I like to look at month over month stats to see what the trend is. So we saw, and just giving you some context here, in March and April, 30-year lows in sales volume, right?
Right.
But now, on top of that, the inventory has been creeping up as well. Not so much in Toronto, where it's pretty much remained flat. So maybe it's hit a peak right now. So in Toronto, it's flat. Both supply and demand has remained flat. In Mississauga, however, both are up about 4%. So we saw active listings go up about 4% month over month. And then at the same time, sales volume goes up about 4%. So maybe that's plateaued as well. In Brampton, very similar story in Brampton. Both supply and demand have gone up about 5%. In Oakville, though, it's a different story, where inventory has gone up about 2%, but sales volume has fallen about 17%. Now, this could be price point, or this could be because it's such a small sample size in Oakville, right, compared to the other markets.
Yep.
But what do you think about these particular stats?
Well, I think we can get very granular with all of these, right?
Yeah,
I mean, within those stats, there's type of property as well, right? And then
absolutely.
we're
Yeah.
looking at what property is bringing down the numbers and what properties are bringing up the numbers. So we can get very granular with it. But I think what's important is to see the projections as well. I
Mm-hmm.
believe TD and CREA came out with their projections for 2026 year
Okay.
end,
Yeah.
and they're estimating home prices appreciate around 4.6%
Right. Okay.
by the end of 2026. And if my math is right, where we're at in terms of an adjustment right now in
Yeah.
prices,
Yeah.
it's going to be about a 6 to 7% swing in home
Mm-hmm.
prices. So that means buyers, if you're listening and you're going in to purchase a home today at a good discount, you could be seeing a 7% swing in home prices because
Yeah.
eventually demand does return, especially in Canada, more so in the Ontario GTA market.
Yeah, absolutely. No, that's a great point as well. And I was thinking about that when we were talking earlier. So even though prices are coming down, at least in Toronto and Mississauga, we saw a 2% drop month over month in prices. In Brampton and Oakville, they remain pretty much flat. But even though the trend right now may be down, we may or may not have hit the bottom. But like you said, the general trend is up, right? So
Correct.
if you're, and I'm a firm believer in buying and holding, like looking at the big picture. So even if you buy now and prices drop a little bit more, maybe the next 5 years, 10 years, et cetera, that is going to recover. I'm very confident that it will recover,
Yeah.
right? And what you just mentioned as well, there's a lot of confidence out there. And if you look at the overall trend from the last 40 years or so that we've been tracking these numbers, yeah, there have been some dips up and down, but the overall trend is certainly up, right? So even if it drops a little bit in the short term, I think long term, if your long term goal is to invest in real estate, I think that's a great idea for sure.
Yeah, and I'd love to jump back to your first initial
Yeah.
comment when we started our show here. You mentioned that buying a home is not like buying a piece of clothing or a
Right.
pair of jeans.
Yeah.
Buying a home is very much an investment for long term. If you are the type of buyer that already knows you want to live in the property for a short period of time, I'm talking 12 to 24 months, and
Right.
you want to flip that property quickly and move into the next, and so on and so forth, then hopefully you're living out of a suitcase in that scenario, right? Because
Mm.
it's going to be almost impossible to time the market
Yeah.
exactly to win. But statistically, what I've seen as well, and a number that I track, is how long individuals stay within a certain home. So, first time
Right.
home buyers, for example, were in their first home about 5 years in
Mm-hmm.
length.
Mm-hmm.
Now that number has risen to 7, 8 years. And the reason why is number one, they're coming with a little bit more backing from the
Right.
COVID years. A lot of first time home buyers were shy, didn't want to step in, but
Yeah.
they have the bank of mom and dad now. They have better savings, better credit, better jobs,
Right.
and now they're looking for better quality properties
Yeah.
that they can grow into for a longer period of time.
Absolutely.
So looking for the right property
Yeah.
has now become available with this increase in inventory. So
Yeah.
if you are a buyer or a seller or anybody that's interested in investing in properties, I think you should be thinking about the tenure
Yeah.
within that home more so than price, value, and all these numbers that we get caught up in of previous history.
100%. No, I couldn't agree more with that for sure. And as I said, I'm definitely a long-term believer in buying and holding and stepping stones, right? So maybe your goal is to have, a house with a two-car garage, a white picket fence and 2.5 kids or whatever that is. But right now, if you want to get into the market, I don't think there's a better opportunity, at least in the last 3 years or so, to get into the market. And maybe it is a condo that you're just starting out with. I mean, like I said, condos right now are so cheap. That's a great investment for you to make right now. And also it gets you in the mindset of being a homeowner. Like you said, maybe putting away money every month into a savings account is help. But at the same time, in the back of your mind, I can always pull that out if I have to.
Correct.
Whereas if it's a mortgage payment, it's an investment into something physical. Yes, the money's going to the bank, but there's all you're still paying it down, and it's still something that you're living in, and it's commitment that you're paying every month, right? So it gets you into that mindset of being a homeowner
Yeah.
and having that monthly mortgage payment that you have to make, right? So no better opportunity as far as I said.
I agree.
I mentioned before.
And a lot of sellers out there, just to have this framework, when we talk about the renewal wave, a lot of individuals are coming up for renewal,
Yep.
meaning they own a home currently, they're
Yep.
about to see their mortgage change, but these individuals have also grown their families within the last 5 to 7 years, right? So potentially now they're looking to move up and use that leverage.
Exactly.
And they're looking to do this, and why I mentioned the renewal wave is at the time of maturity with their mortgage. So they minimize their penalty that they have.
Correct.
So it's very much a time thing for a lot of sellers out there as well. So they're looking to offload a property, save on the penalty. So they might be in a position to negotiate a better price for the buyer out there, so they can then move into a better property themselves. So I think a lot of factors are contributing to a good opportunity right now.
100%, 100%. I think also, and correct me if I'm wrong, it helps your credit, right? So when you have you haven't missed a mortgage payment, you are paying a mortgage versus somebody who isn't. How does that affect your credit score?
Well, it definitely helps it grow because you have an installment loan, meaning
Right.
something that is consistent every month that you
Okay.
must pay. Creditors also look at your capacity, right? So if someone's willing to give you a $300,000, $400,000 credit extension,
Right.
that generally makes you a better candidate for other credit products should you need to, because if somebody can trust you with that amount of money,
Absolutely.
what's another $10,000 on a credit card, right? So yes, in short, it's very, very good, but we also want to make sure that it makes sense for the capacity based on your income level, based on the credit that you already have, and the obligations that you have each month as well.
Right on, right on. Okay, and last point, speaking about renewals, because you mentioned renewals a few times now, and the case used to be where your current lender would lock you into that mortgage because if you went to renew, you didn't have to do a stress test again, and you didn't have to go through the whole qualifying process again. But if you wanted to switch lenders, let's say you weren't happy with your lender for whatever reason, then you have to go through the whole song and dance over again, present all your information, and go through a stress test, blah, blah, blah. So I think that's changed now. They've eliminated the stress test if you want to switch lenders, correct?
Correct, they have, yeah. So you essentially would qualify at the new contract rate that they're offering you, and it's easier to then move over to the bank. Yes, you still need to provide some income documents, but I'll explain it in maybe a more make sense way. If someone were to ask me to provide my letter of employment, pay stub, and some tax return documents to save me potentially $40,000, $50,000 in interest,
Yes, absolutely.
I'll get those to you within the next hour, right? So that's the conversation that I think a lot of those facing a renewal or even mortgages, think about the interest, right? And just because your bank currently holds your mortgage doesn't mean it's the right mortgage for you, right? Maybe you don't know the ins and outs and intricacies that your product currently has, and you might be underutilizing a product. For example, lines of credit. I see clients with lines of credit all the time, and I ask them, is this important to you? Well, we kind of like to have it. I was like, well, do you know the impacts of it at renewal and potentially the handcuff that it has on you to move to another financial institution for a cheaper, better, more flexible option.
Yeah.
And oftentimes they don't. So
no, 100%. I didn't even think of that. I work in real estate. I haven't even thought of that as well. But that's an excellent point for sure. That's great.
And there's many products out there, and that's where I come in. Right. I mean, obviously, you have all the answers in terms of property types, locations, even financing. Right. Like we've bounced many things across the table amongst each other. And on my side, my goal is to provide you that same level of service, but in the mortgage world. Talk to you about your mortgage products. What's in it? What's most important to you? Again, looking at that 5-10 year plan that you have within that property, because the mortgage will be your largest debt within a lifetime, and it has to make sense. Has to be flexible, has to be fluid.
Absolutely. No, that's great. Excellent points all around there, Tom. Thank you so much. Any parting thoughts before we sign off?
Any parting thoughts is if you are interested in buying, selling, give Lambros a call right away. Now is a great opportunity for those buyers out there. And if you're looking to figure out your budget or understand how I could help you as a first-time buyer or an experienced buyer get into your property, your next property, give me a call anytime. Shoot me a DM on Instagram. Quite easy to find out there. And yeah, I would say if you're ready, get out there.
You want to just give them your Instagram
handle? So my Instagram handle is pretty simple. It's at Tom Funds, Funds, it. So easy to find on Instagram. And I can also be reached by phone at 647-643-9092.
Awesome. That's great. One last thing. Are you a baseball fan?
A little bit. I can watch the game. It helps put me to sleep some days, but
that's right.
I do like what the Jays are doing out there.
Absolutely. I think a lot more people are going to become baseball fans now if they continue this trend. Maybe go back to the glory days. Who knows? Do you see a World Series coming up in Toronto?
Fingers crossed. I mean, they just walked into that conversation. So, I mean, as a Toronto sports fan, and I think we touched on this last time, I'm very hesitant with any Toronto team. But I think if anybody can do it right now, I think it's the Jays.
Yeah, the Jays, they're on a pretty good roll right now.
Yeah.
Okay, that's great. Thank you, everyone, for watching. Have a great day.